Good morning, everyone. Welcome to Morning Market Update for Friday, June the 1st. Whoa, this camera's close. Let me just back it up a little bit. Friday, June 1st, we have a really important day today. Some news has already came out, and you're going to notice the market's been volatile. It's the non-farm payrolls reported this morning at 8:30. We'll talk about that and a few other aspects. And then we're going to get into our trading room. We trade live together every morning from 9 to 11 a.m. daily. And it's part of the TradePro Day Trader Elite subscription bundles online. If you guys want to join us, highly recommend you get 14 days money back guarantee, no questions asked. So it's really, at the end of the day, risk-free. All right, let's start out the news by going through some key earnings. There's a bit of a slump in retail over the last 24 hours. Costco's down 2%, not really on earnings, but after raising their minimum wage to $14 an hour. So this minimum wage increase is putting pressure on a lot of retailers. I know, being Canadian and living in Canada, we've seen firsthand a lot of companies struggle with the rising input of higher labor wage, right? And I mean, it's good for workers. It's certainly a good thing, but it's something that businesses are having a hard time adjusting to. Dollar General's down 9.4% after a massive drop in traffic. Dollar Tree's down 14% after weak profit guidance. Retailers are getting hammered. GameStop is down 3.3%. After millennials realize they have to get out of their mom's basement. I'm just kidding. That's not nice. That's not nice. Millennials are always welcome. Lululemon's up 6.2% after posting dazzling sales growth, and that's pretty much it. So retail is taking a little bit of a hit this morning. However, there is good news. In Asia, Japan's down 0.1%, Hong Kong's up 0.1%, China's down 0.7%, India's down 0.3%. So slight weakness in the Asian session. But in Europe, asset prices started to pick up some steam. London's up 0.7%, Paris is up 1.2%, Frankfurt up a whole percentage point. So green across the board in European equities, and that momentum spilling over here into the United States, where the Dow Jones is up 0.5%, S&P's up 0.4%, NASDAQ's up 0.3%, and crude oil is down half a percentage point. So crude continues to get hit, and we think this is on a stronger U.S. dollar. So the stronger dollar today is pushing crude oil prices and gold lower. We're going to talk about why gold is strong in just a moment. All right, we had a really big important report today. Bitcoin's up 0.8%, but still remains around the 7,500 area, so it's kind of neutral territory for us. And we've gained 6 basis points on the 10-year yield, which is up to 2.89 at the moment. All right. This morning at 8:30, we had a very important report of the non-farm payrolls. This is the monthly report that happens on the first Friday of every month, sometimes the second Friday in rare occasions. And what that means is it tells you the number of jobs that have been added in the United States economy, broken down by sector in the previous month. So today's report was for May. So it's not a lagging type of report. It's just 1 month behind. So it's very fresh. It's not stale data. So in May, we had 223,000 jobs added versus 190,000 expected in May. All right. That's a big beat. And I'll tell you why it's a big beat, because not only did we beat the expectations, that ends a little bout of weakness in the labor market over the last couple of reports. Private payrolls were up 218,000 versus 190 expected. Manufacturing payrolls up 18,000 versus 20 expected. So a little bit weaker on the manufacturing front. But that was the only weakness of this report. This was a tremendous jobs report today. This was a huge beat. And equities are going to continue to drive higher on this report and on this news. And I'll show you what could happen with the Fed as well. So average hourly earnings up 0.3% versus 0.2%. So average hourly earnings beat on an annualized basis. That's 2.7% versus 2.6%. So we got a triple whammy today. These Friday reports, these private payrolls reports, the way they work is there's a headline number of how many jobs were added. That's what everybody watches for. But that's 1/3 of the whole picture. The other 2/3 is average hourly earnings. So it's how many jobs were added. That's the payroll number. Average hourly earnings is what's the payment for those hours. Are they making more or less? And the last thing is the unemployment rate. Today we got a triple beat. Very bullish in terms of a jobs number. All right, super bullish. So unemployment came down to 3.8% versus 3.9%. This is significant because that's the lowest number since 2001. All right, that's the lowest unemployment rate since 2001. So jobs are right back on top, and we did have some weakness. So going back to April and March, those were two misses consecutively. We missed the private jobs number 2 months consecutively, and we've missed the private jobs number 6 out of 8 months in the past. So there's a lot of weakness coming into this report, a lot of expectations of weakness. The fact we beat on 3 categories was a very bullish thing, just because we reversed that weak momentum. All right, that trend of weakness across these jobs numbers. Now, what does that mean? Well, the Federal Reserve was always talking about we have a strong labor market, strong labor market. The last couple months, they were looking at it and saying, well, we're concerned the labor market's turning over. We had that. That was a really big strong point in our effort to raise interest rates. Now, when they started to lose that and they had negative numbers coming out, they were starting to say, well, maybe we won't raise the rates anymore. And now this report comes in and blows it out of the water. Donald Trump tweets, I'm looking forward to this report. So who knows? Maybe he knew the number. I mean, he's a president. He surely did know the number. And this pretty much turns everything around. So now the Federal Reserve could say, hey, these whole weaker jobs number months were transitory. That's their favorite word. It's transitory. After a heavy night of drinking, you wake up in the morning, you're transitory. Anyways, it was a bad attempt at a bad joke. So as we continue forward, what does that mean for the Federal Reserve? The odds of a 4th rate hike this year have just shot up. So this is a bit of a double-edged sword. On one front, equities are very excited for this positive news, but on the second edge of that sword, if you will, that means that interest rate increases are going to probably, the likelihood of interest rate increases are going to go up for the short, medium, and long term because of this positive data. And then that's why this market's kind of fighting to simulate some of that info in there, because initial weakness off the report, it dropped. That's concerns of rate hikes. And then we found a support pre-market here. We're going to get long. I missed it by a quarter of a point on the S&P 500. Happens, and the thing rallied all the way back up. So today, look out for that. Look for strength in the equity markets. These jobs numbers are super important to the U.S. dollar. Look for strength or bullishness in the U.S. dollar. And as the dollar rallies on this news, look for weakness in oil and gold. This should continue. I think this is a trend that will continue into the end of Friday. That's how you have to trade it. It is the end of the week, so around 11:30 when the European markets close, it's a great time to call it a work week, right? You have the benefit of not having to work full time. You just have to put in 130% of your concentration during the 2 to 3 hours a day that you do work. This is a less is more business, and you have to understand that. If you're going to battle to the close today, look out towards the last little bit from 2 to 4 p.m. Eastern. It gets a little bit more choppy, dicey, and there's more volatility that gets infused in there. But not really necessarily volatility-seeking trend, just volatility of unwinding the book, hedging some stuff out before the weekend, etc. All right. Last but not least, the European Union throws some counterbalancing measures against the United States' decision to impose tariffs. All right, Canada throws $16.6 billion in import levies, and that includes whiskey. So the Americans won't be able to get whiskey or put orange juice in it with the whiskey. So they decided to do orange juice and food products alongside the metal tariffs. So the trade war has begun. There's no big announcement like we're going to trade war, but it's already begun. The U.S. imposed tariffs first. Other parties are throwing countermeasures to balance out these tariffs. Basically, if you're going to tax me more, this is the thinking of other countries. If you're going to tax my product more, I'm going to tax your product to offset the tax costs that I have on your product. And who wins? Absolutely nobody. Nobody wins a trade war, honestly. Everybody loses. It's a losing proposition for everyone. Further to that, Mexico is going to throw some reciprocal measures against the United States. They want to put tariffs on steel, pork legs, apples, grapes, and cheeses. Sounds like every college dorm's snack of choice. What else? Canada will further challenge the new U.S. tariffs under NATO's Chapter 20 and dispute the entire settlement process and the whole tariff business. So keep an eye out on the wire today. You're going to hear more about these trade tariffs back and forth, and then also keep your ear out on the wire. Can't keep your eye out on something that makes a sound, but I guess there is written text too. So yeah, keep your ear and eyes out on the news wire. Watch for developments in this trade war, and then watch for also developments with any Federal Reserve speakers. The interest rate odds, there's futures on this, and the CME, they've actually increased for a 4th rate hike. That means you're looking at a June, September, and December hike for this year. All right. Keep an eye out on that. You guys have yourselves a great day. Manage your risk. You got to start to the upside in today's session. You got to start buying dips. And if we can't take out key resistances, then you could sell rips and start riding the trend down. But early on, I'm going to start with a bullish idea and allow the market to convince me otherwise. That's it for this week. I hope you guys have enjoyed it. Have yourselves an awesome weekend. Get some rest. Enjoy some time with your family and loved ones. And I'm going to do the same. And we'll catch up again on Monday. Thanks a bunch. We got 2 awesome videos coming out this weekend. 3 p.m. on Saturday, 3 p.m. on Sunday also. I look forward to sharing that with you. Like, comment, share, subscribe, and join us for these updates more regularly because we're here every day. And you should be too. Would love to hang out. See you later. Goodbye. Have a great weekend. Anything else, gents? Marky? All right, let's get at it. Is good advice. Fun coupon Friday. Everything we make on a Friday, we spend at the bar right after. Could you imagine? We'd be in big trouble. All right, see you later, guys.